When you look at McDonald's, it's easy to assume you know how they make their money. They move incredible volumes of product, selling millions of cheap meals to millions of people every single day. But the restaurant industry is notoriously brutal. Food costs constantly fluctuate, labor is expensive, and profit margins are typically razor-thin. Yet the McDonald's Corporation consistently sustains an operating margin of around 45%. That level of immense financial stability has allowed the company to raise its dividend payout to shareholders for 49 consecutive years. This chart shows the operational reality of their 41,000-plus global locations. The corporate entity actually only runs about 5% of these restaurants. The other 95% are operated by independent franchisees. If the central corporation isn't cooking the fries, staffing your registers, or taking on the daily risks of running a food service business, we have to ask how they extract such massive, consistent profit from the system. To understand the math, you have to split McDonald's into 3 separate businesses. There is the restaurant selling the food, the franchise licensing the brand, and the real estate trust owning the land. The corporation outright owns roughly 80% of the physical buildings and 56% of the actual land beneath its franchised locations worldwide. This graph illustrates their physical assets compared to operational revenue. McDonald's global property portfolio is worth $120 billion. Owning the site lets them charge franchisees twice, a 4 to 5% brand royalty and 10 to 15% of gross sales as rent. Combined, these streams ensure the corporation's most lucrative product is the ground the drive-thru sits on. This structure dates back to the early 1950s, when founder Ray Kroc was trying to scale the original McDonald's Brothers system. Kroc was opening new stores rapidly, but his initial agreement only gave the corporation a 1.4% royalty on sales. Even as the chain grew, the central company remained cash poor. In 1956, financial executive Harry J. Sonnenborn realized the royalty model was a structural failure. It provided no steady cash and gave Kroc almost no leverage over his operators. That original model was a financial trap that likely would have bankrupted the company before it could ever achieve global scale. Sonnenborn's solution completely changed the corporate objective. Instead of focusing on food, McDonald's began securing prime commercial real estate at major intersections. The corporation buys or leases the land themselves, finances it at fixed long-term rates, and then subleases the site back to the franchisee at a 20 to 40% markup. The franchisee signs a triple net lease, making them personally responsible for property insurance, maintenance, and taxes, while also fronting the initial $1 to $2 million in construction and equipment costs. This structure isolates McDonald's corporate from local operational risk, guaranteeing fixed rent and shielding their cash flow regardless of daily burger sales. In a traditional franchise arrangement, the parent company has very little power. If a franchisee lets the quality slip but keeps paying their small royalty fee, the licensor struggles to force compliance. But McDonald's operates as a landlord. The operator signs a 20-year franchise agreement that is legally intertwined with their commercial lease. If an owner-operator fails to uphold the strict quality control standards taught at Hamburger University, the corporation can simply terminate the agreement and evict them from the property. Because the corporation controls the actual ground, they have the power to demand absolute adherence to corporate mandates from 40,000 independent operators. Over the decades, they have steadily acquired prime appreciating assets in some of the most expensive and iconic real estate markets on Earth. Today, looking at their balance sheet, those physical property holdings represent roughly 99% of the corporation's total assets. Harry Sonnenborn famously defined the corporation as a real estate enterprise, noting that 15-cent hamburgers were simply the tool that allowed their tenants to pay the rent. McDonald's is a multi-billion-dollar financial fortress disguised as a fast food chain.